Welcome to PM Express Business Edition. Well, some players in the financial space, at least I could talk about the commercial banks, might have recovered strongly based on their third quarter numbers when we talk about the domestic debt exchange program. But can the same be said for the insurance sector in terms of them also posting some strong numbers, or it cannot be the situation for them? Well, on PM Express Business Edition, we're looking at the state of the insurance sector post the domestic debt exchange program. Have they recovered fully, or there are still some lingering issues and challenges? I'm engaging the Chief Executive of the Ghana Insurance Association, Mr. Kingsley Coberson. I hope I got the name right. Interesting time to get your thoughts on development in the insurance space, one may ask. That we've seen the commercial banks post some interesting numbers for Q3 per se. How is the insurance sector doing now?
Well, thank you very much for having me, and thank you for taking time off to listen to us. And I'm really happy to be here. Let me say that we have not completely recovered from the domestic debt exchange.
Interesting, some will say.
Because the figures that we have does not really reflect what is happening in the banks. For example, if you know how our operations are, we measure more. We look at more of what we call the underwriting profit. And it's not as exciting as you would want to.
Where and help some of our viewers who wouldn't appreciate the nuances in the insurance space when it comes to the underwriting profits.
Let's say that there are two ways of getting profit for an insurance company. We have the investment income, and then we have the underwriting. The underwriting means that you assess the risk, you price right, and ensure that you match the risk with the pricing that you've done, and so on and so forth. So typically for an insurer, the measure is more of the underwriting profit, which really reflects the core function of an insurance company than the investment income. And to give you the picture, let's say in 2021, December 2021, non-life insurance companies made a profit of about 31 million. In 2022, December 2022, they made a loss of over 120 million Ghana cedis. And that's for the non-life. The life made a loss of about 200 and something million. So, and the picture has not changed much. Normally what we do is that if we don't make much profit in terms of the underwriting, then we match it up with the profit that the returns that we make from the investment income. But it's not been as rosy as that. So we are still not completely out of the woods yet.
But for these companies who are not listed, this is 2022, which we knew that even most of the commercial banks also were down. Q1 2023, Q2 2023, does the picture still look bad if you want to do the assessment purely on the earnings?
I just mentioned the underwriting and the investment income. Let's say for the Q3, the tentative figures that we have is that for the whole industry, we made about 200 million. And when I talk of profit, I'm talking of profit in terms of both underwriting and investment income. And I say that normally we match it up when we are not able to make underwriting profit match, then we have the investment income. But with all the investment challenge that we find ourselves in, we are challenged, to say the least. Let me also say that the figures I gave you for 2022, the December, for you to get a comparison. For 2022, we made, even though we made underwriting loss, that was matched by some figures that we made in terms of the investment income. But with DDP and all its challenges, don't forget that DDP actually started having effect from Q1, if you could remember. The conversation started around December, and then Q1 implementation time and so on and so forth came into being. So it's not been as rosy as that. And so it's good that we hear that the banking sector have made some recoveries. But don't forget that measures of profitability in both sectors are different. To give you an example, if I invest in a bank, let's say if I buy a fixed deposit, the bank gives me a percentage of whatever monies that I have in the form of interest. Please, do you understand?
I get you.
Insurers give you a multiple of your premium, what you call the sum assured, depending on the kind of risk that you are taking. So it's not straightforward for us to do that comparison in terms of profitability of a bank and that of an insurance company, because the metrics are different. And so we should have that at the back of our mind. Our major concern is our ability to continuously have returns that will put us in a position to be able to give you a multiple of your premium in case a risk crystallizes.
And I'll be coming back to that, and whether with respect to how you find yourself or the state that you find yourself right now at any point in time, and the unpredictability of your industry, you are now in a better position to meet your commitment. But I maybe some would say comparing apples and oranges here, but at least from what I get from you, that we've seen some earnings picking up, but it's lower compared to what you were making previously in terms of the Q2 and even Q3.
No, you see, it's better that we get the picture completely. And I'm saying that for us to get a better picture, we will have to wait maybe till Q4, so that we would have known in terms of the premiums that we got, and then in terms of the claims that we have paid, we will get a complete picture. But let me give you an example. The insurance industry on daily basis pays 7.5 million Ghana cedis as claims.
A day?
Every single day.
Where is this coming from? I thought that
now
the nature of our industry is not that risky, you understand me? So we've not seen any force majeure, maybe accidents are on the low. Help me out for you to...
if we
this is an unintelligent guess or question I want to ask.
Yeah, if you take the insurance industry, we have a number of products. The bigger line is that we have the non-life business and then we have the life business. The non-life business may more or less deal with the non-life insurance company, like insurance the building, the motor vehicles, and so on and so forth. And then the life business deals with everything about the human being, and we might have investment component and so on and so forth. So we have benefits payment and then claims payment.
Okay.
If you sum the two together, we are in the region of 7.5 million Ghana cedis on daily basis. So it will not be absolutely correct to assume that when we're talking of the insurance business, then the focus is only on the risk that we take. But the risk plus whatever investment returns that we are making to our members together is what I'm talking about. And 7.5 million Ghana cedis is a big deal on daily basis.
And are you able to meet that commitment?
Yeah, I'm telling you, I'm talking about even the 2022, December 2022 figures. It tells you what prior year was about 4.3, or that's 2021 was about 4.3 or thereabouts. And we've moved to 7.5 million and we expect to pay more. So that puts us in a very difficult situation if the indicators, the macroeconomic indicators, isn't working in our favor.
How bad, and just to backtrack a little bit, how bad did this domestic debt exchange program impact on the industry? Looking at where you guys had gotten to, a bit about the trust, a bit about meeting your claim parent and all those things. How bad was the situation for you guys?
Let me say this, that a number of factors come to play here. We have what we call solvency requirements. Solvency requirements, we have minimum capital requirements and others. Solvency requirements gives an indication of how solvent you are. And there is a requirement by the regulator that depending on the type of asset that you declare to the regulator, you are seen to be in good position or not. So if we have what we call the discount factors, for example, if I tell the regulator that I have 100 Ghana cedis cash, the regulator will say that no, yes, I see that you have cash, but I have in my books you have 95 cedis. So it means that it is discounted by 5%. If you tell the regulator that I have bonds, government of Ghana bonds and Bank of Ghana notes and so on and so forth,
yeah,
worth 100 cedis, for example, the regulator accept that you indeed have 100 cedis. Now, if you tell the regulator that I have building that I am occupying and working in, so I want you to count that as part of my solvency requirement. The regulator said, if you tell the regulator that it's 100 cedis, the regulator will tell you that no, it's about 70 cedis. So there are discounting factors applied to all these instruments. And the note is that the regulator more or less urges you to invest in Government of Ghana securities because to them it was the safest.
Not that risky.
So we were compelled by the solvency regime and solvency requirements to put more money in the Government of Ghana securities than the others. To give you an idea, we invested about 4.3 billion of our capital asset in Government of Ghana bonds. Now, every financial system has assumptions and opinion. So, for example, we've given 4.3 billion to government, and government has assured us that, oh, we're going to give you a return, an interest rate of, let's say, 18 to 20%. We have used that to do our projections. Then come 2022 or domestic debt exchange, they said, no, we are doing a reclassification. For example, we are extending the tenure, how the maturity period of the bond, and then we are reducing the rate from the 18% to about 5%, 9%, and so on and so forth, with all the permutations that went with the DDEP. So obviously, once the fundamental assumptions underpinning our projections is disturbed, it means that our whole system is thrown into jeopardy. And that was our situation. So if I have 100 Ghana cedis, I have assured the client that give me 70 Ghana cedis, I'm taking 10, 20 or 30% from government. If I add it, I get the 100 cedis and I pay you. Then the government comes in to say that, no, I'm reviewing the terms of the financial arrangements I have with you as an insurance company. What do I tell the client? So that tells, I've just given you a grand picture, but that tells you the situation in which we found ourselves and how bad it was for us, because we're compelled by the regulator then to invest in Government of Ghana bonds, Government of Ghana securities in general, including the bonds.
Mr. Corbison, some will say that nobody put gun against your head. I know about the regulatory bit. You had an opportunity to negotiate with government. Would you say that you had a good deal from this restructuring thing? Because some are saying that, listen, as an association, as a collective body, you could have said that you are not in favor of the terms that have been put on the table. Go back and review the terms and come back, because you're holding people's investment. It has impact on the future of our business and their existence as well.
You know, when we talk of macroeconomic factors, these are factors that are beyond you as an individual. Truth be told, we did negotiate with the government on a number of issues. Maybe one of the key things that we got out of the negotiation was what they call the regulatory forbearances, which said that, yes, we know that you are in a difficult time, and therefore, I'm going to reduce maybe the enforcement actions that I would have taken against you in case we're in normal times. So the regulator said that, okay, let's suspend the minimum capital requirements of 50 million for an insurance company and 125 million for a reinsurance company. Let's also look at the requirement in terms of the the solvency requirements and all that. So yes, those were suspended. But don't forget that suspension does not mean that reality will dawn on us. It was suspended for, I think, 2 years or so. And then one of the things that was part of the regulatory forbearance was that we had some deposit with banks, and the regulator said that depending on your situation, you can negotiate with us and then take part of it. Those are called regulatory forbearances. It means that it gives you a breather, but it is not a panacea to your challenge.
But did you think that you had, but do you think that you had a good deal out of the negotiation? Because I engaged some of your members or even in the banking industry, and you still felt that grumbling as if things was forced on us. Some are saying that as an association, as a collective body, you could have rejected the terms if it wasn't good because of how it could have affected your members, could have affected the industry, could have affected your ability to be that good insurance firm.
You know, the use of the term good is relative.
Relative.
And so I'll not want to go into the semantics of good or otherwise. Truth is that the reality is there. Now, as part of the negotiations or discussions with government, the government assured that there will be what they call the Financial Stability Fund, which I think in around August or so, we had the operational document in place. The implementation is a bit different. It's another issue. But let's say that once two parties have negotiated and have agreed on terms as to whether one had good deal or not, it is not the issue. The issue is that there is something in the macroeconomic environment affecting everyone, and regardless of where you stand, you'll be affected anyway. Let me give you an example, and this is personal, but I think it's relevant. I had a financial, what do you call it, service provider, not an insurance company, who said that, okay, I've been with this provider since 2004, and not a single time has the person reneged on payment of my money to me. And so when DDP came, I went to him and then asked him. I went to the what do you call it, the firm and asked him and asked them that, have you also invested in domestic bonds? They said no. So they gave all the assurances. Then come around June or so, I received a letter from them that they want to engage me. What was the issue? The issue was that they had not, even though they have not directly invested in domestic bonds, they've given money to contractors and other parties who rely on government. So definitely it means that once there are challenges with payment to these other parties, it means that directly the financial system is affected. So the point I'm raising is that whether the issue is not so much about having a good deal, but finding a way of us as a country to navigate out of the system, because whether we had good deal or not, we will be affected in one way or the other, and that is the truth. And so I think that's why I don't want us to dabble into whether we had good deal or not, and then to look at the real effect cumulatively on us and see how we can navigate our way out. Don't forget that insurance penetration since 2000, over 5 years or 6 years, has been hovering around 1%. And there is this talk of how we can increase insurance penetration from the meager 1%. The African average is about 2.6 or 2.7%, and the world average is about 7.5. So if you look at the disparity between what we have as a country and what the African and then the world averages are, it means that we are lagging in terms of insurance penetration. And the question is, with these challenges that we face in our macroeconomic environment, we will be able to improve on the insurance penetration that would have.
Mr. Kobas, I'll be coming back to you to get some clarity on again about this insurance penetration and what do you think can be done, or what are you guys not doing right? Could the claims payment be another big challenge why people don't want to sign on to this thing? And you spoke about the Ghana Stabilization Fund as well, whether we understand it has started work, whether any of your members have been engaged or you made some engagement. This is PM Express Business Edition to look at the state of the insurance industry post-domestic debt exchange program. Are they fully recovered or not? I'm engaging the Chief Executive of the Ghana Insurance Association. Right back after this. Welcome back to PM Express Business Edition as we focus our attention on the insurance industry post this domestic debt exchange program. And how are they doing? Have they fully recovered, or they are still going through some challenges? Engaging the Chief Executive of the Ghana Insurance Association to get some more clarity on how the industry is faring and whether they are poised to take off strongly going into 2024. Mr. Kobason, thank you so much for your time. You spoke about the establishment of the Ghana Financial Stability Fund. We've heard some news about the investment committee meeting, they starting work and all the rest. Has there been any engagement in terms of your members now being able to formally apply or engage them on the support needed or the promise of support as well?
Thank you. Let me start from the association level. There's been some engagement. Now, the fund has initially has $750 million that we are looking at. We have it has the first Fund A1 and Fund A2. Fund A1 is I'm told is money from the World Bank and is specifically dedicated to the banks. So it means that insurance companies cannot access the Fund A1. The Fund A2, which is the 500 million, is from the government of Ghana, and that is what we will be able to access. And again, the information we have is that it is for indigenous banks, indigenous insurance companies in our context. When you meet certain criteria, for example, you should be able to match, if you are taking X amount, you should be able to match, your shareholders should be able to match with that amount. And it's also premised on the fact that you will be able to meet the minimum capital requirements and then the capital adequacy ratio of 150% and so on and so forth. So there's been that engagement, and we've been told that there are certain processes that would have to be undertaken to ensure that the fund becomes fully fledged. Now, let's say that there are two things here. We have the Stability Fund and the Liquidity Assistance Fund. That is the structure. Now, looking at all that, question is, assuming this fund becomes fully operational, will it be able to help the industry get to its normal self? This is a question that we have to answer. I don't think it can fully be able to help in that direction, but it will offer a kind of support. But then, again, don't forget that in our industry, we have both local or indigenous insurance companies and foreign ones that are also operating in Ghana, and both of them took up the invested in the domestic bond market as well. So we have made a plea that there should be the possibility of having an even playing field for both indigenous and then the foreign ones that are also operating in our jurisdiction, who actually invested in domestic bonds. So by and large, talks are still ongoing. We hope that by the end of the year, we should be able to be in a position that we can fully assess the fund, and that will help us meet the challenge that, or ameliorate the challenges that we are facing currently up to a certain level.
So the engagement hasn't gotten to that level where your members can start assessing the fund.
There are requirements that must be met, and we've been told that a regulator is also a part of a certain team that are doing certain groundworks, and once those groundworks are done, then we'll be in a position to have full access.
Because the governor of the Bank of Ghana told us that in terms of the work, the secretariat, or let's say the fund, has now started working. So I feel that then it opened the door for the association of the members to start assessing or drawing down the support. It appears that it hasn't gotten to that stage yet.
No, that's why I'm saying that I'm speaking at the association level. When we get to that, when we have information of members' ability to actually assess it, we will make it. We will.
But you haven't gotten to that level.
Not that I'm aware of, but I know that there are preparatory works that have been done behind the scenes. And our regulator was specifically mentioned because there's some sort of work that the regulator is doing in our particular case of insurance.
Taking all the shocks from the domestic deduction program and the challenges, and even with the claims payment of the 7.4 million Ghana cedis a day, as we speak right now, are you in that better position to perform your functions 100%, or still there are some challenges?
No, the challenges are there and they will continue to be there, because don't forget that our business is risk, and risk is something that you do not have absolute control over. So the challenges are there, but that is why as professionals we try as much as possible to work within this environment to ensure that we're able to meet our commitment, notwithstanding the challenges that we face. But for you to ask whether we are in a position to meet that challenge 100%, I think
because my question is premised on how the debt exchange program has eroded some of these investments that you've had, has delayed some commitment that you had on certain investments and bonds and all those things. And therefore, for instance, if you're supposed to do certain investment or meet certain commitment, you might want to negotiate with your client. You might want to negotiate with some of these investors because of where you find yourself right now. And that is what I'm talking about.
Let me say that, again, it depends on the particular sector, side of the insurance business that you are talking about, the life and the non-life. To give you an example, if you take the life sector, you have what you call guaranteed products.
Yeah.
So once you've agreed that this percentage that you have to give to the client is once a guaranteed product, it means that there's little that you can do about the with or without debt exchange. Then you have those ones that you would have some leeway in terms of what you call mark to market.
Yeah.
Question is, how do you convince the policy holder that because of the challenges that you are facing, you want the policy holder to take part of the challenge, part of the difficulties, and then you also take part of that difficulty in terms of delivering on your promise. It's a difficult situation. Don't forget that insurance has its own challenges in terms of perception. And there's a perception that we don't pay claims. There's a perception that we are quick to take the premiums and then very slow in paying what do you call it, the claims.
Yeah.
And the word I use there is perception.
It's interesting you say it's perception, because for some people out there, they think that it's and I'm going to come to that, the bit about claims payment. Again, are you meeting your obligations as insurers to these policyholders when it comes to claims payment? Because the argument is that people will pay their premiums, but when its time is due, all sorts of impediments. And some will say that maybe that could be the reason why people don't gravitate towards insurance payment, because if it had not been by law, they won't pay. But just to backtrack a little bit, what is the commitment, or how are your members or the insurers faring when it comes to claim payment as we speak right now?
I gave you the figure for 2022, and I'm telling you on authority that the figure is higher as we speak now. We cannot be paying 7.5 million Ghana cedis on daily basis and then say that we are reneging on our promises. That is not correct. That is why I would want to stay within the realm of perception rather than reality. Because, look, George, there are a number of structures in place to ensure that nobody puts impediment on your way when it comes to legitimate claims.
Some also say that it's a perception, because if I engage just to unscientific to bring in some policyholders right now, they will challenge you on that one.
So that's why I'm saying that it is inaccurate, because
that your members delay in paying claims on time.
Those are your words. Don't put those words.
I'm saying that those are the perception. Those are the concerns.
What I am saying is that we have structures that ensures that you will not have your legitimate claims unpaid. Let me give you why I say that. Now we have introduced what we call a 3-tier claims payment system. Yeah. If you have a challenge with your claims, the first company that you have, the first body that you have to concern with is to go to the insurance company.
Like Mr. Coberson's insurance company. I see that the name is the Coberson Insurance Company. Let's use an example here.
Because that was the company that you had a contract with. Yeah. But if that is not resolved, come to the Ghana Insurance Association. We have what we call the Complaints Management and Advice Bureau. Right on the
how many complaints have you received? Let's say
that you have acted actively on. It started 2018, and I can speak on authority that we have resolved not less than 3,000 cases.
For last year?
No, for last year. I'm saying that cumulatively.
Yeah. Okay.
95% of the issues are resolved, because if your peer, don't forget that CMAP or complaint management and advisory is a peer, more or less peer-to-peer. If your peer says that you have to pay, because we have the technical expertise just like the companies. So if we look at the issue and we see that it is a legitimate claim, we ensure that you get whatever is due you. Now, if you are not satisfied with that, you have the National Insurance Commission and ultimately you have the courts. But I can speak on authority that since we started this complaints management and advice bureau system, about 95% of the issues have been resolved. But the word there is legitimate, because maybe we have not told our story.
Aren't we playing on words here? Because the
No,
fact that people are gravitating to your association for these things to be resolved.
Fraud.
And they are not dealing with Mr. Coberson's insurance company, or let's say George Wiafe insurance company, for all those concerns to be addressed. And moving to the association level, it raises questions and concerns about the hedges that policyholders go through to get what is due them.
The basic principle in law is that fraud vitiates every contract. And as we speak now, I have checked on my desk. A claimant says that he has a legitimate claim and that the company was frustrating the company and the claimant. As we speak now, we have spoken to the company. The check is on my desk. The claimant is not ready to pick the check.
Why?
The question is why? Because we investigated and we realized that it was a fraudulent claim. And we are suffering quietly, maybe because we have not broadcasted, we have been very conservative about the issue of fraud. For example, let's take life insurance. There's what we call the waiting period, if you are very versed in that. So you take the policy, you have a waiting period, which means if the person dies within that period, the claims will not be paid and so on and so forth. Within 1 year, how can the father, the mother, the uncle, the sister, the wife die? In the absence of a plane crash, it cannot happen.
In your investigations,
so
what have you been able to cover in terms of the fraudulent cases that has come up?
A lot. It's systemic in nature. It's systemic in nature. You have people who are in a position. You know, we also rely on third parties. For example, you need a police report. You need you need the doctor's report, depending on the situation, and so on and so forth. Let me even go back. In 2004, are you aware that a lawyer committed suicide because he attempted defrauding us, the insurance industry, obviously through arson? So that is why we are very much interested in the word legitimate. If the claim is legitimate, we'll ensure that it is paid. Life, general, on what we call non-life business, we pay. And the challenge we have now, and what saddens our heart now, is that if we don't put structures and measures in place to ensure that we are in a position to continue to pay the 7.5 million Ghana cedis that we are paying as claims on daily basis, if you take, let's say, let me even break it down, for the claims proper. When I say claims proper, I'm not talking of benefits. I'm talking of claims. Let's say that's about 3-point-something million Ghana cedis on daily basis. Accidents and what have you. If we are not in a position to pay those claims, or even if people are not in a position to take off policies to be able to be covered, so that when those claims emerge, and when the risk crystallizes, we are able to pay those claims, it means that it will be a burden on the government. And that is why we cannot stress the need for macroeconomic stability and good macroeconomic indicators enough for us to be in a position to pay. In
this fraudulent issue that you've spoken about, isn't it 1 out of 10?
No.
And that condition is being used to paint everybody black, every policyholder black.
No.
How bad is the
situation? We
have
arrested people in authority. We have prosecuted people in authority. People that you expect...
For making fraudulent claims.
Exactly. People... I will not want to mention
not mentioning, but I mean...
No, I'll not mention professions. But I'm telling you that people who are supposed to be responsible people in society...
White collar people.
Security officers and so on. Security, accountants, everybody. So, we would have loved to pay claims promptly. We do. When the evidence is so clear, we pay. I can tell you that we pay claims sometimes within 48 hours.
There are some who have been promising a same-day claim, but
There are
sometimes
minor
it
ones.
goes beyond the same day.
No.
Sometimes.
Once it is legitimate, we don't have a problem with that. Because we are in the claims payment business. That's our business. But when we have issues, we need to investigate.
Do you think, and some have argued, and I stand to be educated, they think that the delay they go through in getting their claims could be a major factor. That is why we are struggling when it comes to penetration and letting everybody appreciate that insurance is a must and not a luxury.
I think it's I would want to use the word perception and about our lifestyle and about our views of religion and all that, that God is our protector and all this. It's good. We are a very religious country. But, you know, we must balance that religiosity, for want of a better word, with good business sense and practicality and pragmatism. We must do that balance. It's because we've not gotten to the stage where we've come to the realization that, look, yes, God is our helper and God is our protector, but we live in a world that the unforeseen can happen, and therefore we need to protect. As we speak now, I know you are a Christian.
Yeah.
Am I correct?
Yes, I am.
You are working feverishly towards your salvation. That's not so.
Definitely I am.
Okay.
Yeah.
So at least you have insurance
Yes,
in
I
Jesus
do.
Christ, isn't it?
Yes, I
We are
do.
saying that once you live in the world, take
Yes,
an
I do.
insurance so that the insurance companies will also take care of you when you are, as far as you are in the world. But let me say that the one issue that we have to deal with is this issue of taxes. And specifically, if you look at the issue of we've cited a bill.
I'll come to the 2024 budget and also the implications on your operations as well. But I'm just saying that, so what are you also doing in terms of working hard to deal with this perception so that it would aid in the penetration in a situation where we don't see insurance as a luxury, but a necessity if all these issues are theirs? What are you doing in that space to help improve the penetration?
one thing that we are doing is through education. We have established what we call the Insurance Awareness Coordinators Group, whose job it is to coordinate all insurance-related education in the country. And it's been supported by all the industry bodies. You have the National Insurance Commission, you have the Ghana Insurance Association, you have the Insurance Brokers Association of Ghana, you have the Chartered Insurance Ladies Association of Ghana, and all the bodies. We have agreed that the way to go is for us to have a collective voice in terms of education. So we have the IACG, which has embarked on massive insurance education throughout the country. We've been on about 120 radio stations across the country. We've translated various insurance messages in local languages, about 36 local languages.
And is it getting the results?
Yes, there's been some.
Are you seeing from the numbers and your research guys are giving to you? Are you seeing an uptick?
Yes, we've seen
in
that
these numbers?
coverage has increased. Coverage has increased, but it has not reflected in penetration. The difference is that when you talk of coverage, we are looking at, let's say, a coverage of 44% means the number of people who have taken insurance. But insurance penetration looks at what is the contribution, monetary contribution of insurance to the GDP. So in terms of monetary contribution to the GDP, it has not been that big. It has not been that massive, which would have loved to. Would have loved to get 3 or 4%, at least for starters.
So what do you tell those who might also argue that maybe the best form of education is letting people out there appreciate that you are 100% committed or you honor these claims on time, and these bits about fraud has been a major challenge? That is why you might have delay. Maybe your trump card here in convincing people out there is that when it comes to claims, your members don't compromise. That could be it. That could do the trick for you.
That is what we are. That is why we are here, and that is why you are one of our ambassadors to tell the story for us. We will tell the story, but you have a wide audience. So tell the member, tell the public that insurers say that we pay legitimate claims promptly.
That the insurance due on time when they as a policyholder walk into your office, you pay on time.
Precisely.
That is the best ambassadorial job.
Let me tell you that the regulator beyond everything is there for public interest. And the regulator has come out with what they call the claims management guidelines. It is very specific that if the claim is so and so, you must be able to pay within this period. And by and large, when your regulator says you should pay claims on time, that is exactly what the regulator means. Because if you do not do, there are punitive measures, there are penalties, there are sanctions. So we want to avoid the sanctions.
Interesting.
And if you know the kind of sanctions that I'm talking about, it can go as high as 5,000 penalty units.
Which I think your members can pay.
No,
your members can readily pay
if
by signing up that check.
If you pay, what will be its effect on your underwriting profit?
Might be insignificant, some would say.
It is. I just told you that Q3 for the non-life, we are looking at 200 million Ghana cedis in terms of both underwriting and investment profit.
I'll be coming back to get your quick thoughts on the 2024 budget, the bit about the regulatory environment, taxes issues as well, and what that will mean for your operations going forward. And there's been this whole argument about maybe the time has come for us to take a second look at the premium payments as well. There's this PM Express Business Edition as we talk about the insurance sector and the domestic debt exchange program and how that has impacted on the operations of insurance firms. We'll be right back after this break. Welcome back to PM Express Business Edition as we talk about a sector that is very, very important, and some would say you don't recognize its importance until you get into that challenge and you need that claim to be paid or that insurance company to fall on. I'm engaging the Chief Executive of the Ghana Insurers Association, Dr. Kwesi Kobason, getting more details from him on what is happening in the insurance. But Doc, I just want to get from you as well. There are some who have argued that maybe, and some of your members, they think that, listen, the time has come to take a second look at the premiums that we pay. I know the regulator will do his job by trying to protect us, but the justification is that, listen, if you want to get the benefits due you, something has to be done about premiums.
Yes, thank you very much. Let me talk specifically about motor insurance, because it's something that is regulated by law. And then let me correct that it's not every insurance policy that is compulsory. So I'm focusing on the motor. You know, motor is a big thing for us as a country. So before we come out with premiums, we engage various stakeholders, the transport unions, the regulator, and so on and so forth, just to ensure that we are fair. The word there is equity, to ensure that there's equity in our pricing and it makes business sense as well. Because we pay a multiple of that premium as claims. So we should be in a position that will help us be able to deliver on our mandate. So our last year, we had engagements, and it was agreed that we can, rather than waiting till there is waiting too long, we must have annual increment to reflect the challenges of the depreciation of our cedi and inflation, and which lead to increase in cost of our operations. So we've been doing that, and so one of the challenges that we've had post DDP is the issue of the impact of the depreciation of the cedi and then inflation on our cost of doing business. It has really led to an increase in the cost of doing business. So we, in line with the agreements that we had with the various stakeholders, we will make a little adjustment in terms of the premiums to reflect.
For motor here?
For motor, I'm talking about motor, motor and so on, motor. But it will reflect in other policies as well. And so that is definitely in the offing, but we will have discussions with the stakeholders.
And is it just for comprehensive third party or cross board?
Normally it's the regulator. We engage the regulator and it cuts across. Because at the end of the day, we should be able to pay what we call realistic sum assured. Sum assured that the value will not dwindle in terms of ability to perform the function that you took the money for. So we will do that. We intend to do that. But a worry that we have is this, that we've cited a bill that is more or less imposing VAT on non-life insurance policies. And to give you an idea, it means that if, for the sake of this discussion, we agree with stakeholders that we are, let's say, increasing by 15%, for example, 10 or 15%, it means that if there is a VAT of 21% added to the 10 or 15%, that is huge. And it will be a challenge for everyone, in the sense that the transport owner or the driver or whoever it is will have to pay about 21% more than he would have ordinarily paid had this conversation of VAT not come.
And I'll come to more details on this VAT or this bill before Parliament. That will be very soon considered as part of the 2024 budget. Let me still backtrack a little bit on this motor insurance development. Now, if the agreement was that it will be done yearly,
yes,
I hope that by now you've done the necessary stakeholder engagement already, hoping that the economists will say, all other things being equal, it could start from January next year. Am I right?
Yeah, we are still engaging. If you remember, we agreed last year to implement the 2023 one at a certain point, but it was agreed January that we should wait till January 2024.
Yeah.
January 2023.
Yeah.
So similarly, we are looking at maybe January 2023 or thereabout.
January 2024, sorry.
January 2024.
Yeah.
Depending on the conversation with the stakeholders. But we've engaged, and we are still engaging.
What have you proposed? And what have you proposed from your end in terms of the expected increment for motor?
I don't want to preempt the discussion. I mean,
let's look at the ban, because if Mr. Doc, if it's going to take place in January, I believe that all the necessary stakeholder engagement has been done. You firm up on the numbers and the expected adjustment.
We will give everything will be made
public. What band are your members proposing for it to be approved by the regulator for it to take off?
What I'm saying is that what I can do is to give you scenarios.
Yeah.
But I'll not dovetail on the details. What I'm saying is that, for example, if we look at 10% increment, for example, 10% plus VAT takes it to 31. 15% increment means 15% plus 31 plus 21. That makes about 36%. So that is why we are having the stakeholder engagement to ensure that whatever is charged will be equitable and make business sense.
Doc, some will say that if this is going to take place in January.
No, I didn't talk about January. I'm saying that
if January 2024,
stakeholders will agree on when it will take place.
But the likely, look at what has happened the previous year, it could take place. And some are saying that, Doc, by now you've done all the engagement. You have the numbers.
No, we've not done all the engagement.
We are left with about 10 or 20% or 30%, Doc.
You are fond of putting words in my mouth.
No, I'm not putting words. I'm just asking the question.
So I'm saying that, I mean, when you are engaging with stakeholders, you have to be fair. The agreement is that we have to come out with specifics after everything consultation have been done. So I will want to stick to that. But I'm giving the scenario that if, let's say, there is 10% increment.
If we hold the VAT development
as the
constant,
economist says, ceteris paribus.
let's hold it constant. If this VAT issue had not come in,
let's say 10%.
We'll be looking at a minimum of like 10%.
Minimum of 10%.
Or 15%. And that will happen for the motor. Now let's come back to, and that will possibly from next year, ensure that you guys are able to meet your obligations for motor, and the very, very critical on that one. Now there is something before Parliament. Have your members been engaged on that? Because it's interesting that most of these levies and taxes, there are supposed to be industry engagement before it's even captured in the budget.
No, you see, the difference that I know is that when it comes to taxation, in most cases, it goes through the certificate of urgency. Yeah. Unlike other bills where there are broad consultation and so on and so forth. And our plea to the public and to government is that if what we are hearing is true, the 21% VAT on non-life businesses, if it is true, it will have serious repercussions in terms of our ability to survive as an industry. Look, let me give you the scenario. I just told you that we are paying claims, and we have what we call the compensation fund. The compensation fund is there for, let's say, situations where either the vehicle is not insured, or there's a hit and run situation where you cannot find the driver, and so on and so forth. As we speak now, we are compelled to cap the benefits that you are likely to get from the compensation fund, because the fund is dwindling by the day.
Interesting.
It's dwindling by the day. Of course, it's one of the aftermath of the DDEP and so on and so forth. So that could have been what do you call it? A buffer. But the truth is that the figure there is dwindling by the day. And so if we increase the premiums so much, including the VAT, to a figure, let's say 31%, assuming the 10% argument stands. 10 plus 21 gives us 31%. If we increase premium by 31% and people are not able to afford, it means that they remain their own insurers. It means that many of them do not have insurance, the protection that would have given. And how many of them will be able to afford the services, medical services, and so on and so forth, assuming they are involved in accidents and so on and so forth. So that is why we are pleading that this news we are hearing about the 21% VAT introduced on non-life insurance businesses, for want of a better word, should be put on hold or it should be stopped, because it has repercussion and effect on the ordinary Ghanaian.
But Doc, that is serious. If from an association level you say you are hearing, and maybe
no, when we talk of we are hearing, we've cited
you've cited bills that are before Parliament.
There is a bill.
And this is going to increase VAT on non-life business.
Non-life
and that affects
business.
Which kind of category
non-life
of products?
Businesses, non-life business affect motor, fire, and some of the compulsory insurance that you have in the law, liability insurances, everything. Marine insurance is non-life. Liability insurances, the public liability insurance, professional indemnity, they are all non-life insurance businesses. So assuming we increase same by 31%, let's take professional indemnity. Professional indemnity is to indemnify the negligence of maybe the professional.
The doctor.
So the doctor. And you know the recent cases that we are having in terms of negligence of some of our professionals. If they are not able to afford these premiums, it has repercussion on the ordinary person on the street.
Have you made these concerns to government? Because if it's before Parliament, and judging from past experiences, it could go through.
Now that
will have implications for your business. That have implications for. Let's look at the consumption patterns or the purchasing power of a lot of Ghanaians now. Some would say it's nothing to write home about.
Well, this is one of the medium, and I know that Joy FM and PM Express is a big voice. So it's one of the avenues we are using in terms of the advocacy and appeal. There will be engagement. Why not? There will definitely be engagement. We will engage our regulator, because the regulator more or less represents government. We will engage with our regulator.
What has the regulator told you?
No, we will engage with our regulator. I said we will engage with our regulator, because our checks was that there were some institutions who are supposed to even know about the bill. Maybe it's because it went through under the certificate of urgency, so maybe they might not have been aware. But once we have public notice, we have no choice than to keep talking about it to ensure. And then your good self should also appeal to government on our behalf.
But some will say this is very serious, because at a time when the economic environment is not doing that well, at a time when the consumption or the consuming power, the purchasing power of a lot of Ghanaians have dwindled so low, this tax might end up killing the business.
Well, it is the reason why we are all concerned. And my view is that we should all have a voice or speak to the issue, and then make the appeal to government that we are in very difficult times. And so imposing 21% or so VAT on non-life insurance businesses will be a challenge. If we even limit our argument to motor, it has serious repercussions for the economy as a whole.
Let's come to capital requirement. And there's been argument in saying that, listen, the time has come to triple or whatever. What do you make of these arguments about the capital increase? Because we need all your members to be in good standing to meet the bad day, the rainy day. And looking at how unpredictable the economy has been, there's been no better time to talk about capital requirement than now.
Now, I share the view that we must move into what we call the risk-based regulatory environment. Risk-based means that we should look at the type of risk that you take as business, and then based on that, we ask you to have this capital. Amount of capital. And that's best practice.
And not the one size fits all.
Yes, because you should also avoid idle capital, where, for example, the regulator says get 50 million. You know that you only need 20 million to underwrite the kind of business that you are writing. It means that the 30 million is what? Idle capital. Looking at this particular investment environment, what do you make of the 30 million excess? So we are rather appealing to the regulator, and I have seen or we've heard of steps in that direction that we should move into the risk-based capital environment.
I know that in the banking space, there's been that talk about it.
The risk-based capital environment will help.
Undercutting. Some are saying that your own members, or some of them who are not even members of your industry, this practice is not helping the industry. Have we made a critical progress in that space to ensure that everybody stick to fair market prices when it comes to pricing of products?
I'll give you this. The law, the Insurance Act 1061, if you check, I think section 256, frowns on undercutting.
And is everybody complying by that?
The penalty is so hefty. If you undercut by 1 cedi, you pay a penalty of 60,000 Ghana cedis. That's 5,000 penalty units. And the information is not sent just to you as the CEO, but to other, what you call it, could be to the board members, to the board, and so on and so forth. So we take undercutting seriously. And we as an association, you know, we are promoting the self-regulatory environment. One of the functions is to ensure that if we see or hear or somebody reports that you have undercut, the first thing is that we ask you to reverse the business and the position. If you do not, we take steps to penalize you by collaborating with the regulator.
And is that happening?
It is happening.
So have we moved away where in the past the argument was that it was so predominant that we've seen a drastic reduction when it comes to pricing?
I'm careful when I'm using words like drastic and so on and so forth. But there's definitely a lot of work has been done on that. And fortunately, we are moving into 2024. I hope to see less and less of that happening. But there's another issue that maybe we've not averted our minds to. We talked about domestic debt exchange, the first phase. Don't forget that we have the Euro bonds.
Did you invest in the Euro bonds?
Our members have investment in the Euro bonds.
The discussions are going on.
And there's also the cocoa. Is it bills, the cocoa bills? Our members have invested in all that. So the issue of the impact.
It's still early days to measure the impact in your sector.
No, when I say the issue of the impact of any increment in taxation on these products and so on and so forth, without considering the effect of where the negotiations on the Euro bonds will get to, it's something that we have to look at. So we are saying that we should look at the issue holistically. And for you to get a picture, if you look at the operational document of the Ghana Stability Fund, it tells you the type of DDP, we've been to DDP 1 and 2 and so on and so forth. All of these have repercussion for the sector. And so that's why we say that the issue of VAT should be treated more seriously to ensure that the public do not unduly suffer, at least from the end of motor insurance.
But the good thing for the Eurobond and the cocoa bill that you still have an opportunity to negotiate and ensure that you get the best deal that you have to get?
I refrain from using best deal,
Okay.
the terms like best and so on and so forth, for obvious reasons, because it's relative. What we need is that at the end of the day, we should be able to get an enabling environment that will make us do our work properly.
Doc, as we wrap up, if you look at the IMF document, if you look at the World Bank document, you get the semblance that they give an indication that we are seeing signs of stability. How has this signs of stability, inflation trending down a little bit, the Ghana cedi being fairly stable, now impacting on your operations in terms of these macro situations
now,
going forward?
You have legacy issues to deal with. So it will not be completely right for you to judge the situation now without putting it in the context of the cumulative effect of the previous worsening indicators on you. Do you get my argument?
I get you.
So I will not move into that business of saying that because we are seeing improved indicators, it will help. No, because we have legacy issues we've not dealt with.
And unless those things are dealt with,
I'm hoping that maybe
the now will be
Q1 2024, those challenges will even out. Then, let's say the seeming, what do you call it, good indicator now will be able to negate whatever challenges we've had previously. Once it evens out, then we'll be able to have the conversation of the positive effect on us. But as we speak now, we've not completely dealt with the legacy issues, and so we are hoping that we are optimistic that things will be better. Once it gets better, we will report same.
Well, they are optimistic that things might be better going forward, but there are still some legacy issues to deal with. I believe that the debate will still go on in your homes and your offices about what can be done more to convince you to sign up to insurance and whether the concerns about claims are being dealt with. This has been PM Express Business Edition as we looked at the insurance industry and how the domestic donation program has impacted on the business of insurance in Ghana today. My name is George Wiafe. Have a great day.